Hello traders, welcome back to GolgiFx, and this is your boy Golgi. So in this video, we'll be looking at one of the very popular and top indicator that traders use to make right decision when trading in a volatile market. And also, this indicator will help you to avoid getting stop out of good trade setup. So at the end of the video, you will know the right way to place or set up your stop loss, and also the right time to follow up trades if you're a day or swing trader. So if you're new to my channel, please like this video and subscribe to my channel to be notified on the coming videos. Traders, let's get into the video. So as a trader, understanding the volatility of the market is very important in making the right trading decision as you trade. So this means that knowing how volatility changes with market contents can help you to make better trading decision, like setting up your stop loss and also how long you are going to stay in the market, either long or short term. One of the popular indicator that can help us to measure volatility in the market is the average true range. So the average true range is an indicator that measures the average of true range over a specific period. So this indicator measures volatility that is taking into account the gaps in the prices movement. So the average true range indicator calculation is based on a 14-day period, which can be used in the intraday, the daily, the weekly, and the monthly. But to measure recent volatility or short-term movement in the market, you can use the 2-day and the 10-day period to calculate the volatility. And also, if you are a trader who trades for longer time, you can calculate the volatility using the 20 and the 50-day period of this indicator. So traders, this indicator is very useful as you trade, and with this you can always set your levels or your stop loss and take profits right with the help of this indicator. So I will move to the chart and I'll show you some of the trades that I took with the help of this indicator, and also how I set up this indicator. So traders, let's get into the chart. So traders, I'm currently on my MT4 platform, and you can see if I come to this level, I can add my indicator. The indicator that we are going to use is the average true range. And if you check under oscillators, you can see the first indicator, which is the average true range. So we are going to add this indicator to our chart. And the period that I use for trading on the daily time frame is the 25 period. So I'll set it to 25, and the style I'll leave it to black, and I'll click on OK. So you can see my indicator is nicely drawn on my chart, and what I'll be doing is, if you look on my chart, you can see these are some trades that I took around this level. I saw a nice opportunity here for price to retest this level and sell. And also you can see around this level too, when price broke this level, I was expecting price to retest this level and continue to sell. This is a break and retest trading strategy that I was using, or some people will say it's a retracement when the market sell and it retraces back and continue. So how can I set my stop loss or use the average true range in my trading? So if you look at this trade that I took here, I placed this rectangle here whereby I was expecting market to come to this level, and this was my blue candle. That's when I saw this trade. So you can see that on this candle I come to my ATR indicator, and you can see that the volatility on this candle for the last 25 days was 110, was around 110, which means that if I want to set my stop loss, I will set it above this level, which should be 110 pips. Some people use 70% or 60% of what the ATR volatility will give us, which means that if you look at the last 25 candle, the average volatility for those candle, or the average true range for those candle, is 110. So what I'll do is I'll place my sell limit around this point and target around 100 pips. even though the average true range was around 110, I'll target around 100 pips above this level, which I did. And if you target 100 pips above this level, your stop loss will be around this point, which, let me set it, it was around this level, which my stop loss was here, and my take profit was 1 to 3. So I placed 1 to 3, which was around 300 pips, basically around this level. So my take profit too was around this level. So you can see that with the average true range, anytime that I set a stop loss, since I'm using the average movement of these candles, it will be very hard for the market to hit my stop loss before the market moves in my direction. And this does not mean that you use the average range at any level that you want and you set, but you mostly use this indicator at key levels where you want to take a trade. You can see that around this level, this is a very clear level where price broke and retest number of times. So clearly I was expecting price to push down. That's why I took this trade. So this is one example of how to use the average trade to set your stop loss. And also, if you can see, I have a second trade here, which you can see price was around this level, and I wanted price to retest this level, which you can see I have placed an arrow here, a very nice one here. So even though price is around this level, I was expecting price to touch this level before I sell, because if you look at structure, you can see the market was moving in the downtrend retracement, so I was expecting market to push down. So with this, how am I going to set my stop loss? With the help of the average true range, I'll come and see the average range for the last 25 days, which is around 98 to 100. 98 to 100, you can see from here, 98 to 100, which means that if I want to set my stop loss, that is the range or the pips that I'll be setting within the range of 100 pips. So I'll come here and check my levels here. When price gets here, the average range can change, so I can place a limit here, set a stop loss to 100 pips, or I'll wait here and wait for price to get to that level and I'll set my stop loss. I can wait for price to get to this level, check the average true range, which is around 100 pips, and I'll set it above, or I'll set a sell limit around this level, target 100 pips, then I'll sell to the downside. So these are some of the way that you can use the average true range to set your stop loss. And this indicator is very effective because it is calculating the average volatility movement, each candle movement for the past 25 days, and it's giving it to you. So you know that at least if the market is pushing up, the next candle will be in a range of 100 pips. So this is how I use the ATR indicator to help set stop loss when I want to swing a trade or when I want to be in a long-term trade. So let's look at how you can use this indicator when you are day trading also. So I'll come to my 4-hour time frame and you can look at this level. This is also a setup that I saw here when I wanted to buy when the market was in a downtrend. You can see the market got to this level, was consolidating, broke, came back to break again. So I was looking for a retest around this level. So when price got to this level, it was a very nice opportunity for me to look for buying entry. But for me to do that, I have to go to the 1-hour time frame and to look at how price was acting there. So you can see when price got there, it pushed up and it gave us this nice rejection here. So this is a very nice point for us to enter a trade for a buy. So to enter a trade, what should I do? I have to set or target a take profit and my stop loss. And with the help of the ATR, I'll be able to know the volatility of this market and also where I should be setting my stop loss. But for trading on the 1-hour time frame, I don't use 25 moving average or the 25 period, but rather I use the 14. So I'll come here and change my settings and I'll set my ATR to be 14. Then I'll click done. So when I'm done, I'll go back to my trade. This was my trade. So I'll look at the average true range of this trade I wanted to trade. So when I come to this level and look at around this, you can see my average range is giving me like 19 pips, which means that if I want to take this trade here, I can set my stop loss 19 pips below this candle, meaning if the next candle has come to form, the movement of that candle can give us 19 pips. So I'll come here and set my stop loss here 19 pips below the next candle, which is here. So I'll set my stop loss 19 pips, which is around this level, which is even below this level, exactly below this level. 19 pips here is around this level. So that was it, 19 pips. And you take a trade here. So you can see that this trade is protecting you, and also with that, you have set a very good stop loss. In a way, if this market is coming to push down, you'll be able to get your stop out around this level. And we set our take profit around 60 to 50 pips. So our stop loss was around this point and our take profit was around this point. One thing that new traders mostly find it hard to do is, okay, we say, why am I setting my stop loss to 19 pips? What loss size am I going to use? So what you do is that you have to get a risk to reward management plan. So if you want to take any trade based on this, you should know also the loss size that you're going to use, because it's very important to add the loss size or the risk management to your trading. So using this indicator does not mean that if you have 19 pips, meaning you're going to open a very big loss size because you know that the market will move around this or be in your position. But rather what you should do is to get a right risk to reward management plan. So anytime that you get the stop loss or the average ATR average here, which is 19, you use that to calculate for the number of loss size to use, so that always you'll be able to protect your account and you'll be able to make more profit from the market. So one thing that you can also do after taking the trade is, since you know the average movement of each candle, you can target, let's say, you know that I'm targeting 30 pips, meaning my 3 or 4 candles, I should be expecting the trade to be around my TP, or the next 2 candles, I'm expecting the trade to be around my SL. So with this, if you're a trader and you always trade with motions, and with one candle move you want to close your trade, it will help you to stay out of the chart and come back. So you know that I'm trading on the 1 hour time frame, and likely the next 3 candles, which I know that each average is around 20 pips or 19 pips, meaning I am likely that the next 3 candles will hit my TP. So I'll move in the next 3 hours, I'll come back and come and check my trade. If I'm setting my stop loss to 10 pips and I know that my take profit is 30 or 40 pips, and for the next 3 or 2 candles, my take profit or my stop loss will hit, you can leave the market, and in the next 3 hours or the next 1 hour, you come back and come and check, rather than sitting there and looking at the trade, which can trigger your emotions for you to close the trade. So I think these are some of the best practices that you can check when trading. So traders, these are some of the ways that you can use to set your stop loss and also target your take profit in trading. And I think this is the best way and one of the easiest way to set stop loss without wondering how many pips or where can I set my stop loss. What you need is to know the level where you are trading, and if you're able to get that level, then you can use the average volatility of that candle or around that candle to set your stop loss. And with this, the market will find it hard to always stop you out before moving in your right direction. So one question that most traders ask is, if I have 19 pip stop loss or I have 20 pip stop loss from the ATR, how can I use my loss size to set or target this level? So in my coming videos, I'll be showing you how to use this number of pip to set your loss size using good risk management plan. So traders, that's all for this video. I hope you like it. Please like and subscribe to our channel, and see you in the next video.